Hello and welcome or welcome back if you're a returning listener to Buy or Sell. Coming to you from the No Holds Bar here at Equity Mates HQ, I'm your host, Adam Keily, widely regarded as one of the simplest minds in finance. Luckily for us, though, as always, I'm joined by an expert to educate me and hopefully you on how they're thinking about stocks and the stocks they're thinking about. Of course, this isn't a deep dive. We're just going to get through as many stocks as we can in the time that we've got. And you can, of course, find out more about each stock on the Equity Mates website. And today, I'm really thrilled to welcome back to the show the Equity Mates community would know him very well, of course. I am, of course, talking about Henry Jennings, Senior Market Analyst at Marcus Today. Welcome back, Henry.
What an intro. It's been a while, Adam, but thank you guys for having me back on. It's always a pleasure.
Absolutely wouldn't. Now, we do like to kick things off, as you know, in the No Holds Bar by offering you a beverage to help you settle in and relax. Now, last time we had you on, I think it was a Long Island iced tea, Henry, citing
Yeah.
some efficiencies around alcohol content. But the signature cocktail today, just so you're aware, is the Gina and Tonic. A little nod to Gina Reinhart because we're talking about Liontown, of which she owns 20%. So,
Yeah.
what could I get for you? What can I offer you today, Henry?
Well, I think the Gina and Tonic sounds very nice as well. Maybe a bit of lithium fever tree to go with that.
Yeah,
So, yeah, no, I'm always partial to a bit of gin and tonics.
it's got a bit of a kick. It's fair to say.
Has
It's
it? It can
yeah.
be, in my experience, it can be a little disappointing, the Liontown Gina and Tonic, and it does have a tendency to not go quite according to plan afterwards.
All right. Hey, I did mention this is the second time that
Yeah.
we've had you on the show. So we've got 10 stocks to cover off today, but we do have the buy or sell tracker on the Equity Mates website. And I did think it'd be good just to reflect back on your top 10 from last time,
Right.
and see how we're tracking now. Just across the board, I will let you know that your 10 stocks are up an even 30%. So
Um,
that's pretty tidy work. Are you happy with that?
I'm relatively happy with that. I'm sure there's some nasty ones in there and some good ones as well. But yeah, 30%. I guess that's when was the last time I was on, Adam? That was
Yeah, so that's February. So February,
February.
19th of February, we had you on.
Oh, so well, it's not
So
bad.
30% in that time, that's pretty good.
Yeah, I'll be
Uh,
happy with that.
Couple of standouts. Drone Shield up 83%. I reckon it actually got higher than that at one point, but it's currently at 83% from February. So that's pretty good.
Yeah, it did get a lot higher than that. In fact, when I came back from a holiday overseas, it was a $2 billion market cap, and the first thing I did
Yeah.
was look at it and go, "You're kidding me, aren't you?" And then I put a sell on it. So I think
Right.
that was above $2,
Yep.
and then it had another equity issue. So yeah,
Right.
it's been good, but it has been. It's fair to say it has been quite volatile. That's for sure.
Yeah. All right. Well, that one's an interesting one. The other one, which we did mention, Liontown Resources. You had that one last time, so we might put a pin in this and talk about this in more detail a bit
Sure.
later on. But that's down 32% from calling it a buy back in February.
Yeah.
So maybe we'll come back to that one a bit later on as we dive a bit deeper into Liontown. The big winner was Zip, which we're going to talk about in a minute. So Zip is up 242%. Henry, if you don't mind, from February. You'd be happy with that one.
I am pretty happy with that one. We've got a lot of members of the newsletter that are pretty happy with that one as well. So yeah, it
Mm,
has been. I guess it has been a standout, hasn't it? It's kind of hard to believe, and I wrote about this one back last Christmas as well, when it was sort of 39.40 cents, and it's now what nearly $3. So it has been
mm,
extraordinary. But what is extraordinary, I found, was that when it was sort of 39.40 cents, the market cap was 250, 300 million. They did a capital raise recently, which was actually bigger than the market cap less than a year ago. So it just shows you, I
right.
guess, how far that company has come in terms of its focus and what's happened in the US, which has been the main driver of the share price.
So up 240 odd percent. Are you zipping up the profits? Are you going to let it fly? What's the plan from here? Is it got more upside?
To be honest, Adam, I think it has. And when I picked this one back in December, before I talked to you guys in February, it was
Mm,
really predicated on the U.S. consumer. Now, there's one thing in the U.S. that is all-consuming, if you pardon the pun. It is that U.S. consumer, and they do love to spend. And even when times get tough, they continue to really spend. And 80% of the US economy is consumer led. So you've got rates coming down in the US, which is obviously a good thing, although it's coming a little bit slower maybe than some would like. And that is a good thing. We're also coming into that critical period, I guess, from now, actually, depending on when this
mm.
podcast goes out. But it's Amazon Prime. Well, it's not day, it's week. I think October the 8th to the 13th.
Thanks for the reminder. I actually had some things on my list I was
Oh,
planning on
did you?
buying, so that's good. Yeah.
Well, go forth. So
Yeah.
yeah, if you want that RoboVac, now is the time to buy it. So we've got Amazon Prime, we've got Thanksgiving, you've got Black Friday, Cyber Monday,
Yeah.
all this sort of stuff. And last year we did see a big sort of US consumer push, and it was a pretty good push from
Mm,
them. And it's even when the consumer gets hard up, they still spend. It's just they change the way they're spending. And I
yeah.
think credit card use is on the decline. Zip and other buy now, pay later providers, Affirm, Klarna, etc., have made significant inroads into the US. And I think that's going to continue. We do have results for these guys coming up on the 29th of October. We did
Mhm.
see some broker upgrades as well for the likes of Affirm and the whole sector, really, in the buy now, pay later sector. So it's very much got a nice tailwind, I guess. The only thing that I would temper that enthusiasm with is just, it's run, what was it, 230, 240%? It's
Yeah.
run extraordinarily hard. And that's from when we spoke in February,
Yeah. Yeah.
from when I originally started talking about this back at 40 cents. And I have to say, hats off to a good friend of mine, Jonathan Higgins at Unified Capital Partners, who has been spot on with this one along the way. And we've chatted and done a few podcasts with him as well. It's just been an absolute boom of a story, and I don't think it's over yet. But when the
Mm,
chartists look at the technical picture, they tend to look at assuming that they don't really look at the fundamentals sometimes, and they don't
mm.
really look at the market cap of, say, Zip. The same happened with Drone Shield when it got to above $2. No one looked at it and went, "Oh, that's a $2 billion company," which has not
Yeah.
got huge amounts of profits and huge amounts of revenue, and therefore it may have got ahead of itself. I think Zip probably, I was going to say, the easy money has been made, and I think to some extent it has. I think now it's more a sort of a slow grind, but it is responding well to the US consumer, and we are seeing a greater adoption of buy now, pay later in the US.
Yeah.
It's, as Jeremy Clarkson would say, it's a thing. I've done
Yeah. Yeah.
I've done a thing, and Zip really have done a thing, and hats off to them. I got to say, they have.
Yeah.
I had a chat to the management some time ago, and they were very focused. They stopped messing about in the UK and other peripheral markets. They were very
Yeah.
focused on getting Australia and New Zealand right, which they have done, and then that focal point being the US consumer and buy now, pay later there, which has been very successful.
Right. Zip is the thing and maybe poised to benefit from the Santa rally that I always hear about, which, yeah,
Well,
I love it.
well, especially if they keep spending like the
Yeah.
proverbial drunken sailors.
That's right. All right, so Zip's a buy. All right, let's move on. And next we're going to look at IGO Limited, ASX IGO, currently trading at $5.33. IGO sounds like a new toilet from Apple to go with your iMac and your iPhone. They're not a toilet maker though, Henry. They're a lithium miner. Buy or sell for IGO?
Well, it's probably I don't go at the moment.
Right.
It's been a tortuous story, I have to say. IGO pivoted, I guess, famously, and they bought what turned out to be quite a dog of a business, which I think the market knew all along because it was one of the biggest short positions in the market. And they bought into a
Yep.
nickel business called Western Areas some time ago, and basically the money they paid for it, they kind of wrote the whole lot off.
Right.
Not just the money and a bad idea. they've recently got a new MD, Ivan Vella, who has a new vision for the company. Now, the problem that these guys have got is that they are in the nickel and lithium game, and that has not been, as we know, to our detriment, it's not been an easy game to play. So it really has suffered there. They recently did have an investor day, and there was lots of grand sort of visions from Mr. Vella and how things were going to improve. Greenbush's productivity is one of their big sort of planks, I guess, in their revival. Capital returns, exploration, simplification was a focus as well, but they are very much geared towards these new metals that, well, not new metals, but nickel and lithium, the new world metals, I guess, the new age metals. So they are kind of hostage to those to some extent. I have to say, you know, we've seen recently the great Chinese turnaround, which you know, actually proved to be a 1 week wonder to some extent, and we're yet to see it really follow through. And there's that sort of fool me once, fool me twice kind of thing. But you have to think that if IGO can execute this vision, and they were a little light on detail, and we do get a slight increase in lithium prices, a slight increase in nickel prices, and the animal instincts are once again unleashed, we could see this one pop. This is not a high conviction buy, but I think it's one of those ones that, you know, it's straw hats in winter to some extent, and you have to buy resources when they're on the nose, because at some stage, you know, we will get that rally. It's come down from $8 to, you know, $5.30 or something. So it's not been pretty, but I'd rather be a buyer than a seller here, and it's over really to Mr. Vella to kind of prove us all right or all wrong, depending on your view of whether he can turn things around. But they are, unfortunately, it is always going to be about lithium pricing and nickel pricing. So they can do the best.
Nothing like some good visionary statements to get the lithium investors excited.
Well, you know, if you're a lithium investor, we've you know, you've been through the good times, and you've been through the bad, and you know, at the moment it's very much bad, but you know, there is light, I guess, at the end of the tunnel in some respects, and I guess we'll talk about that when we talk about Liontown.
Yeah, absolutely. All right, so IGO is a buy. Next, we're looking at Qantas Airways Limited, ASX QAN, currently trading at $7.13. Qantas recently had to apologise, Henry, for showing an R-rated film to every passenger on a flight from Sydney to Tokyo. The film was called Every Passenger. Everyone on the plane got to watch Daddy-O, an R-rated film. Now, as a father of an 8 and 10-year-old girl, I'm pretty happy that I wasn't a Daddy-O on that plane, having to shield my children.
I've never even heard of that movie.
No, early release,
which may be a good thing, Adam. I have to say that may be a good thing that I haven't heard of Daddy-O.
Didn't get good reviews on the plane, fair to say. It went down like a ton of bricks.
I'd be interested to see how the stewardesses reacted when all the lights went on of all the passengers that were watching it.
Yeah, I think there was parents complaining, and the flight crew couldn't turn it off. They couldn't.
Even more funny.
It was disastrous. So anyway, speaking of ratings, how do we rate the Qantas share price, Henry? Buy or sell?
I'm a bit of a seller of Qantas, I have to say. Okay. It has had an almighty rally off the low. I think probably if you charted Alan Joyce's demise with Vanessa Hudson's inauguration, the share price has done nothing but go up ever since. For me, the price has shot ahead, and I think there's a lot of kind of nationalistic pride associated with this one. It's, you know, it's like iconic. They just got fined $100 million for ghost flights. So, you know, the ghost flights are the ones that people could book but actually weren't flying. They were already going to be either cancelled or had been cancelled. They just sucking people in to book flights on things that didn't exist. So there's another $100 million. There's obviously, you know, hope that dividends will come back. The balance sheet is relatively strong, and they did make a mozza out of the government when we had the pandemic. So that's all good. And Vanessa Hudson has made certainly strides in improving the perception, but I think they've still got issues in terms of, you know, headwinds with the oil price, which has been low, and that's obviously driven the share price higher as well. But, that oil price has been bobbling around now, and we've got problems in the Middle East
Mm.
and increased competition from Qatar. And when you go to Skyscanner, as I do from time to time, and go through the airlines and what they're offering in terms of pricing, that those really big prices that they could get, I guess, a year or so ago or 18 months ago, those days have gone. We're back to where we were, I guess, pre-pandemic. You can still fly on a good airline to London for $2,000, and
Yeah.
that's Malaysian, Cathay.
You might not get that premium movie viewing experience on those
Well,
airlines.
there
I think
might
that's
there might be
the downside.
subtitles. There might be subtitles.
That's the last thing anybody
For
needs.
me, Qantas is just one. I think if I was a shareholder, I'd be taking some
Yeah.
profits. I wouldn't be aggressively selling them, but certainly, after the run you've had from sort of $5.56 to over $7, I think I'd be quite happy to take some money off the table there.
All right, Qantas is a sell. Next, CSL Limited, ASX CSL, currently trading at $294.41. Hopefully, the Bloods at CSL fare better than the Bloods in the AFL Grand Final, Henry.
Yeah.
Now, this is one you actually called it a buy in February at 284, so it's up about 3% thereabouts. Though you'd have some dividends too, of course. So where are you at with CSL now? Buy or sell?
I think it's a buy at the moment, Adam. It's one of those stocks that does tend to trade in a bit of a range, and the range is sort of $260 to around 300, 310. It got to 310 back in July, August, and was sold down from there. And now it's starting to perk up again. So I think there's a little bit more upside in this one. If it gets to $310 again, I think I'd be a seller. But for now, we're approaching the Northern Hemisphere winter flu season there. It's obviously a big market. They've got some new products coming through as well. And when you look at the market, there is a certain allure of defensive stocks. And, if China, we've had yet another false start with China, then, that trade, which we saw so much of in terms of buying the banks, buying the REITs, buying, some tech stocks here, that will probably come back, and the resources will suffer. And CSL is very much a defensive stock. So I think it's a buy, but probably the upside is limited to $310 there.
Okay, CSL's a buy. Next, Liontown Resources. We mentioned Liontown at the top of the show. ASX LTR currently trading at 80 cents. Lithium miner recently started shipping from their Kathleen Valley site, or Kathleen, as it's known in some parts of the country.
Yeah.
You had it as a buy in February at $1.18, now at 84 cents. Still buying or time to get out?
Well, obviously I got that wrong, didn't I? I went way too early. So I apologize.
I try to avoid the term wrong here, Henry.
No,
Not right yet. That's all.
I'm quite happy to admit my mistake. I mean, you've always still got the ticket in the lottery, I guess.
That's right.
Liontown, once again, it's another lithium stock that has suffered because of the lithium price. It's also heavily shorted. Now, don't forget that it wasn't that long ago, searching back into my memory bank, that Liontown was the subject of a bid from an overseas player, Albemarle, and Gina Reinhardt stepped in at the last minute when the wedding was being just about to be, the consummation at the altar of "You May Kiss the Bride" at $3. And they said, "Is there anybody here that can show just cause why this marriage shouldn't go ahead?" Gina stuck up her hand at the back pew and said, "Yes, me. I want 20% of this at $3." And these guys just walked away. So, the hope, I guess, is that something corporately happens with this. They have shipped their first spodumene from Kathleen Valley. So that's to an existing offtake customer. That happened recently. They're about to, I think, ship their second shipment. The interesting thing, I guess, Adam, for all lithium players is the move in the last few days of Rio. Now, it's long been suggested that Rio has ambitions in the lithium space. They have a project in Argentina, Rincon, and they also have a slightly environmentally challenged and politically challenged project in Serbia as well, which kind of gets approvals, then it gets knocked back, then it gets approvals, and then there's a protest, and it sort of goes on ice again. So clearly they have ambitions, and they have made an approach to Arcadium Lithium, which is the Livent Alchem sort of joint when they put that one together, when they put Humpty together. So there is some corporate appeal, I guess, to Liontown. We've seen it before. And there is consolidation, I think, that needs to be done in the sector. There's some strong players. There's some stronger players that are making the best of what my mother would say is a pig's breakfast, which is which is the lithium price. The likes of Pilbara are doing all they can in terms of efficiencies, getting costs down, and building out production to maximize what they can. But the price is obviously the big determinant there. So for me, Liontown is probably still a buy. I noticed that one broker today did downgrade to 45 cents, which is kind of half where they are now. I'm sure Gina won't be dealing with them. But here we are at 80 odd cents. I can't help but feel there are some attractions to this one. And as we get closer, we've got first production and we've got first shipment rather. As we get sort of closer to nameplate capacity and the risks diminish, then the only risk you're really taking is the lithium price. And Rio have kind of stamped their selves and said, we don't care what it is tomorrow or the day after. What we care about is where it is in a decade, which I think is a bit rubbish, to be honest, because we can't even predict what the price is tomorrow, let alone what it's going to be in a decade. But that's Rio. So there is some corporate appeal. I think at 80 cents for me, it's a buy. I'm going to stick with it, Adam. I could have egg on my face next time we talk. It wouldn't be the first time, and I'm sure it won't be the last.
Not a problem at all. I'm still struggling with the mental image of consummation happening at the altar, Henry. It
probably wasn't the right word.
Why don't we take a break here? We'll grab another Gina and tonic and be back with more buy or sell right after this.
Cool.
Welcome back. You're listening to Buy or Sell, coming to you from the No Holds Bar here at Equity Mates HQ. My expert today is Henry Jennings, Senior Market Analyst at Marcus Today. We've got another few stocks to get through, and we're going to kick it off with NextDC ASX NXT, currently $17.82. I saw a headline that they were raising $2.9 billion in debt. I didn't know raising debt was a good thing. If so, I've been absolutely killing it lately, Henry, you'd be pleased to know. NextDC, a buy or a sell for you?
NextDC is a buy, Adam, for me. I've not been a massive fan of this company, but the data center theme is kind of overwhelming in some respects. And unfortunately, in Australia on the ASX, there are very few ways to get exposure to that data center theme. Now, obviously, with the growth of AI and all that's happening, we are seeing this explosion in the need for data centers. And I guess one of the catalysts for NextDC was that air trunk deal, which, when they first mooted it, I think they was talking about $15 billion for it. Which is data centers up in Asia. Eventually, I think it went for 24 billion. So that was a pretty bullish estimate in terms of pricing. So clearly there is a demand out there. NextDC have a record of raising capital, raising funds, and building new data centers. And that's what the stock market is all about. At the end of the day, the stock market is a device so that companies can raise funds to expand their business. That's really why the stock market exists. And obviously to hedge risk for secondary investors. So NextDC raised a ton of money again at $17.15, and they are expanding into Asia. Now that could send shivers through most people's spines, but these guys know what they're doing. They've obviously got to buy the land, build the data centers, etc. So it's not going to happen overnight, as Rachel Hunter would say, but it will happen. And at the moment, the share price was kind of languishing because of the fact that they raised all this money. $550 million in a equity placement at $17.50. They had an SPP as well. So it was not a small amount of money they raised. So I think it's been languishing, a bit of indigestion there, which is now rapidly being worked through, and the stock's back up to $17.80. I think this has got $20 written all over it, to be honest, Adam. And it just needs that indigestion to pass, a little bit of a catalyst, maybe a little bit of a kick up the tush. And it'll be $20. So I'm quite positive on NextDC.
All right, bit of laxative work to get done on NextDC.
Well, you could say that. Yeah, that's a good way of putting
it. We're really pumping out the mental images for the listeners today, aren't we?
Yeah, they're going to struggle with this one. Hopefully, no one's eating.
All right, so NextDC is a buy. Next, we've got Lynas Rare Earths Limited, ASX LYC, currently trading at $7.40, up 32% in the past 6 months. Seems Lynas Rare Earths might be in rare air at the moment. Is it a buy or a sell?
It was on my list as a sell. It has come off
Hmm.
a little bit since I started talking it as a sell. It kind of it was defying gravity in some respects and defying what was happening elsewhere in critical metals, because we have seen, lithium, we've talked about nickel, we've talked about even copper, had a big spurt and then came off. So Linus was sort of defying gravity a little bit. It's come back to earth a smidge. It did have some
Yep.
solid results. EBITDA was up 9%, and it did exceed market expectations on their earnings. And of course, it is rare earths, and it is building a plant in Australia. It's also got a foot in America as well. The Kalgoorlie ramp up is going well, so that is good. Of course, it can get political up in Malaysia with their LAMP plant up there, which is the plant that processes rare earths, because they're not very clean, to be honest, Adam. They're not the easiest
Right.
things to process, and they do leave a little bit of radioactive material, which isn't always that popular if you're going to produce it. Um, in,
Just a little bit. That's fine. No one minds a little bit,
no,
surely.
no, well, it's a bit, doesn't do well in
Just a
the,
smattering of,
just a
of
smidge.
radioactivity around the
It
place.
doesn't go too well in your local industrial park. So they set up in Malaysia to get rid of that. Mount Weld
Right.
is their project. It's huge. There's no problem with the resource. The problem has always been in terms of processing, but they are trying to alleviate that with a kind of a first step with that Kalgoorlie plant, and they're also setting up in Texas. Amanda Lacaze has done a fantastic job with Lynas, and
Mhm.
obviously it has got strategic importance, being that rare earths are dominated completely by China. So
Right.
that does play into, I guess, the IRA with Joe Biden and Kamala Harris. Of course, that could all change under Donald Trump, but who knows? But for me, it's just run a little bit hard. I wouldn't go massively aggressive on the sell-off,
Yep.
but I could easily see this one dropping, 8-10% without too much trouble, back towards, $6.87 without too much trouble. And then maybe consolidate and push higher again, depending on what's happening. But yeah,
Okay.
it's a sell for me at the moment.
Sell for now. All right. Next, then, we're looking at Southern Cross Electrical Engineering Limited, ASX SXE, currently trading at $1.82. My portfolio could certainly do with the spark, Henry. Is Southern Cross Electrical it?
It's well, we talked about data centers, didn't we, Adam? And we talked
Yeah.
about how it's hard to get exposure to data centers. Southern
Yep.
Cross is one way, I guess, in some respects, a slightly easier and safer way to play the data center thing, in that it doesn't need the same capital requirements of the likes of NextDC in terms of capital raising. Southern Cross does do the fit out
Ah,
on electrical installations, data centers being part of that fit out, and they have won some pretty big contracts recently. They've made an acquisition as well, the MDE Group, and they have made some good contract wins in terms of data centers. So if you think, if you're looking at something that's maybe potentially a little bit safer, maybe a little
mm,
less volatile, perhaps, than the next DCs, or even, Macquarie Telecom, which is another one involved in the data center business, although that is quite illiquid. Southern Cross Engineering or electrical engineering, to me, is part of that equation. And at $1.80, it does tend to bounce around a bit. It's not the most liquid of stocks at times,
yeah.
but another contract win would push it, above $2. It tends to be announcement driven, I have to say, because it's, as with all small caps, they tend to be forgotten and put to the side, put in the corner. And if you want to put baby in the corner,
Hmm.
then this is what happens with small caps, and then they react to an announcement. They did have, they've been very positive on their results, so I've got no
Yep.
problems with this one. I think it's a buy.
The likes of NextDC, they use these guys
Yeah,
in the building of the data centers, and
yeah,
so
yeah.
so we're sort of just watching them to see whether they announce more partnerships like that. I mean, do NextDC use them at the moment, or are they
Yeah, they've got contracts with a
right?
lot of the big boys in
Yeah. Okay.
terms of doing the fit out, because
Yeah.
it's not an easy or cheap process to fit out these data centers. So yeah, they have been winning some good contracts in this one, and they got a $160 million contract from Collie Battery Project as well with energy storage systems. It's $160 million. That's the
Yeah.
largest award in group history. That was back in May. So it's not just about data centers; it's also about battery storage as well. So
Right.
it's they did upgrade their profit guidance back in May as well. Made an acquisition. It's just one of those small caps that kind of just beavers away in the background, and you forget about it, and then they'll come out with another announcement, and they'll pop
Yeah.
on the back of that, and then they'll do nothing for the next 6 months before the next announcement. So it's one of those sort of stocks.
All right. Southern Cross Electrical is a buy. Next, ASX Limited, ASX, currently trading at $65.86. I always feel like we're stepping into the matrix when we start talking about the ASX as a company as opposed to the market. How are you thinking about the ASX, Henry? Is it buy or sell?
Um, I, I'd like to say it's not a buy. I'm not sure it's. I think it is a sell at the moment.
Okay.
They've got competition. It was only the other day actually that I think Magellan has backed a mob called FinClear, which has a clearing kind of business. The problem the ASX has is a number of issues. Is that volumes are not. I guess volumes are not really reflective of where we are in terms of the market. Here we are an all-time high, and the market should be going gangbusters in terms of volume, and we haven't seen that. Certainly not in the equity side of things. The other problem they have is that the market going gangbusters at all-time highs. You would like to see this avalanche of IPOs where we get where the ASX get a lot of their fees from as well. And really, apart from GYG, which was I mean the shares have done well only because they're scarce. But that was kind of supposed to be the stock that banged on the door, opened the door, and then there would be this rush of IPOs to the market and save the ASX. That hasn't happened. They've also got increased competition from the SIBO as well. And you've got Chicago Board of Exchange behind an alternate exchange in Australia. So for me, that's three strikes. And then if you add that to the debacle that was the CHESS replacement, and even now they're still only talking about 2029, and maybe FinClear will get there before them. So, the whole CHESS debacle was not good. They wrote off a lot of money and wasted a lot of time and really upset a lot of brokers because, the brokers are having to invest in new systems to interact with the ASX. And if the ASX gets it wrong, the brokers have wasted money as well. So I'm not a fan of this as a platform. There is, I guess, some corporate appeal, but I'm sure that the FIRB wouldn't let that happen. It didn't last time when Singapore got kind of interested in it. So for me,
have they had competition in the past? It feels like they've been running a bit of a monopoly for a long time. Is it competitors have come and failed, or is it just that there hasn't been that competitive tension before?
Well, there has been competition in the past, and it has been around for a while, to be honest. The Newcastle Stock Exchange, which became the National Stock Exchange, was a tiny, weeny little competitor. But the big competitor was Chi-X, and that was kind of the alternate market. But under CBOE, the Chicago Board, who took over that business, it's grown and grown and grown to the extent now that there's some products, some ETFs, some tracker products that are only listed on the CBOE, and clearly it is stealing market share from the ASX. It doesn't have, the same, I guess, the futures penetration in terms of bonds, and we have seen some good volumes coming out of bond trades and SPY trading as well. So futures not doing too badly, but that IPO avalanche really hasn't happened, and thankfully, the management has changed, so that's a positive against the four negatives that we talked about. So thankfully, the management has changed. The chairman, Damien Roche, is set to leave, so that is closing the chapter on Damien's. He's retiring. Helen Lofthouse is now in charge. It's just got, I guess the problem for the ASX is the problem for lots of kind of companies is that to attract top talent, you've got to be a top company. And if you're really, really talented, you're probably not going to want to work for the ASX.
Yeah. Okay.
It's kind of one of those, one of those gigs where you tend to go towards the twilight of an
Out to
illustrious.
pasture in the ASX and
Well,
whittle away your
maybe not
final
quite
years.
past it, because that would be unfair to the boys and
Yeah.
girls at the ASX. But if
Yep.
you're a top-notch corporate lawyer or you're a top-notch corporate regulator, it's more a calling, I suspect, than going to work in what you would consider maybe the private sector, where your
Yeah.
remuneration would be higher. So you're
Fair
never
enough.
going to attract the top programmers, the top coders, the top people that are going to go for the chess thing. I mean,
Yep.
they were going to do blockchain, and it was all going to be,
Oh, yeah, I remember that.
it was
Yeah.
all going to be singing and dancing. It was all going to be fantastic, cutting edge stuff. And they ripped
Yeah.
up hundreds of millions of bucks in the process and got absolutely nowhere with it. So
All right.
my faith has been shaken and stirred, if we're going back to the bar room.
Another martini coming up, perhaps.
Yes. Exactly.
All right. So ASX Limited is a sell. Time for the last call here in the No Holds Bar, and it will actually be the last call for the year. This is our final episode for the year.
Oh.
I want to thank everyone for tuning in to all these episodes. I want to thank the guys at Equity Mates for allowing me to come in and jump on the feed and do these buy or sell shows. I think they've been a lot of fun. I've certainly learned a lot and really enjoyed them. So this is it, Henry. This is our final call for the year. And to finish, we're going to take a look at Xanadu Mines Limited, ASX XAM, currently trading at 7 cents. Now, maybe a bit of a specky, but in the immortal words of the late Olivia Newton-John, open your eyes and see what we have made is real. We are in Xanadu. Henry, is Xanadu the real deal?
Rosebud. I've seen. I've got to say, Xanadu is an interesting proposition. They've got a joint venture up in Mongolia with a Chinese company, Xinjiang. I probably pronounced that like an Englishman, but they are pretty close to where Rio is in terms of their big copper thing up in Mongolia. This is a copper gold thing. Colin Moorhead is the man at the helm there. The fact that they've got a big brother is good, and it's bad, I guess. And we've seen this before with having a big brother. It's good in that it gives you that access to funding. It gives you, because Xinjiang are not a small company by any stretch of the imagination, so that they are a Goliath big brother, if you like. So that is a good, and that can help with funding. It opens doors, etc. The problem is that sometimes big brothers can stifle your growth and hold you back. And that has happened to I guess many an Australian company that's been involved in Chinese business. It can just hold you back. So these guys, their flagship project, Copper Gold, Kamagtai, up in Mongolia, and they are in the final stages of the PFS, that preliminary feasibility study, technical review and evaluation. The share price has perked up on the back of that. This is a minnow. This is a spec. It's $120 million market cap. But I've seen them present a couple of times. Colin Moorhead has been around the traps for a little while, so he's certainly no stranger, and no stranger to Mongolia. So it's good to back people. Clearly the Chinese are backing them as well. It's in the right place, I guess, to some extent at the right time as well, and that we are pregnant with that PFS. We've had some MET results out recently, and so I think this has got potential. It is highly speculative, so I would warn listeners and viewers that it is speculative, and it could easily flop back to 5 cents. It could easily run to 10 cents. These stocks do tend to run in advance of the PFS, and then people go look at it and go, "Oh, is that really the numbers?" Ooh. You know what it's like, Adam, because nature abhors a vacuum, doesn't it? And if you have a vacuum, it's like when you're in bed and there's a sound comes from somewhere, and you then start imagining all sorts of horrible things under the bed or in the cupboard or whatever. So our imagination can run riot, and this is the same with stocks. So if there's no information, we tend to imagine, and in the case of specky mining stocks, that imagination runs to hopium. and lots of hopium and lots of hope that things are going to get better. And sometimes when the reality is, when you look under the bed, there is actually a monster there, and that you were right to stay in bed, pull the doona up, and not get too involved. So this is probably, it's probably 5 cents or 10 cents.
Yeah.
It's
okay.
speculative.
All right, Xanadu is a buy, and you mentioned older brothers stifling creativity and stifling progress. Does remind me that I'm back with my older brother doing Comedian versus Economist, the podcast on Equity Mates Media. So if you haven't heard that, then make sure you go and listen to him stifle my progress. But no, it's a lot of fun. Otherwise, that's it, Henry. Thank you so much for joining me again in the No Holds Bar. Where can people find you if they'd like to hear more from you? You mentioned the newsletter.
You can go to markestoday.com.au. You can sign up for a 2-week free trial, and you can read all the stuff that we have to offer from our portfolios, strategy, ETFs, small caps, large caps, education. It's all there, Adam. It's a cornucopia of investment stuff.
It's almost too easy, Henry. That's what it is. You'd be mad not to.
You'd be mad not to. All you got to do is pay us the money, keep me gainfully employed. It's Christmas, and I don't want the kiddies to go without their presents this year.
Absolutely. Hey, thank you so much once again for joining me. And you can catch me on Comedian versus Economist, as I say, back in your podcast feed every Thursday. Make sure you sign up for that one if you're not already. And you can find this podcast on YouTube as well. I hope you've enjoyed Buy or Sell. As I say, thanks to Bryce and Alec for letting me jump into their feed and take over from time to time. It's been a lot of fun. And that is it for the year. So hopefully you'll join us again for more Buy or Sell next year. Until then, it is bye for now.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful. Equity.